Hey guys, what's going on? Welcome into the video. So the stock market had a major rally this past week, including Thursday's 5% plus move, which was the largest single day gain since the 2020 COVID crash. In this week's video, we're going to be asking the question, did the stock market just bottom and what are the chances of that? We'll then be going over what to watch for moving forward and then some trade ideas and a trading plan for this week upcoming. Let's go ahead and get on into it. So what started the big move this past week was the CPI report on Thursday morning. Inflation came in at 7.7% year over year versus the expectation of 7.9%, so it came in 0.2% below expectations, which was overall a huge relief and a big surprise to the market. Now my personal take on this is the inflation downside miss is definitely a positive start, but it really does not change much for the broader macro picture yet. If you told me at the beginning of the year that inflation was still as high as 7.7% year over year in November, I'd be absolutely shocked that the market would not be lower than it is now, but here we are. Bear market rallies are dangerous for a reason though. A ton of money was piled into shorts expecting an uglier inflation number, and beating to the downside was a huge surprise for the market, so a ton of shorts were forced to cover, resulting in short squeezes all over the place. Just for example, taking a look at a few consensus short stocks, Carvana hit an intra-week low of 6.5 and rallied all the way up to 11.88, close to an 80% squeeze in a 2-day span. Redfin is another. This hit an intra-week low of 3.08 and rallied up to 5.23, close to a 70% move in just 2 days. And there are countless other examples like this that played out in the past week. When shorts are caught off sides, massive squeeze rallies like this can happen, which is what I personally believe happened in the past week. So if you ask me, I am very doubtful that the absolute bottom is in, but I do think this rally could have some more legs into mid-December. So the next major catalysts are on December 13th through 14th. So on the 13th, we have the next CPI report, and then on the 14th, we have the next FOMC meeting. My take on this is if the market rallies further into the Fed meeting, Powell is going to be pissed and a massive hawk to send the market back down lower. To put it simply, the Fed just does not want the stock market to go up, as they voiced many times. Stocks going up make consumers feel more wealthy, therefore they spend more money, which equals inflation taking longer to go down and staying higher for a longer period. If the market rallies into this time frame, which is still a big if, do not get me wrong, a little bit before December 13th and 14th dates is the time to get super cautious in my opinion and potentially prepare for a leg down, though of course anything can happen, maybe they will pivot, I just think that is highly unlikely. Zooming out on the S&P, we have two major resistance points to watch moving forward. The 200-day moving average has resulted in large drops when it's been touched during this full downtrend, and the trendline resistance of the channel has also been respected 3 times during this long-term downtrend and been peaks each time when it's touched. If you ask me though, I do not think it's going to be as simple this time around. So if I was to lay out a base case for how this rally will end up playing out, this is what I'm thinking. So due to being overextended currently, my expectation is a pullback next, then continuation higher towards the 200-day moving average, and then a pullback there before breaking above the 200-day and the long-term trendline resistance. This would be the point where investors are fully bulled up, confident that the bottom is in. But the stock market does not make things easy though, and bear market rallies trap as much money as possible before reversing back down. So if this scenario played out, I would expect this to turn into a massive bull trap and false breakout where it reverses back down and starts the capitulation leg down for the market, where things could get really ugly if that was to play out in that false breakout scenario. The fundamental bear case from here is pretty simple. Consensus estimates already project inflation falling drastically from here, which is a big positive, but from here on out, if inflation does what it's expected and drops pretty rapidly, it's not going to have the same effect we saw during last week's CPI report that caught a lot of people off sides. I do not think the next downside miss would do much of the same. It would be a positive reaction, no doubt, but not that 5% plus move that we saw this week. What's a major risk from here is the high likelihood for negative earnings growth in 2023, which the market is just not pricing in right now. The US recession probability model is estimating a 96% chance for a recession, and not a single historical bear market has bottomed before the recession, so there are still major risks to be aware of moving forward, even though inflation is starting to move in the right direction. Alright, so now taking a more short-term view of the market and talking about some trading opportunities for the week ahead. Before anything else, we should be expecting a pullback next to cool off the currently overbought conditions. I marked each time that the RSI has become overbought on the 4-hour chart, and as we can see, each time this happens, it either pulls back, consolidates in the same range for multiple days before moving higher, or it marks tops. So currently this is not an attractive risk reward spot to enter long in. We should expect either multiple days of consolidation to make this an attractive entry, or a pullback to start at the beginning of the week, which is what I am personally expecting. On the S&P futures chart, it broke out above the trend line at 38.50 this past week, so now that level becomes a must-hold support for this rally to stay intact, and as long as that holds, in the short term the market is back in buy the dip mode. A big zone that I'm watching this week as a possible dip buy spot is the 3900 to 3930 range. A pullback there would cool off the oversold conditions, and if that zone holds, it would be a strong higher low setup and likely to result in a leg higher and more upside afterwards. We could also see something like this play out, a slight undercut of that support zone, a hold of trendline support, and then a reclaim above that zone, which would also be a strong setup for continued upside. At the very least though, this is not a favorable spot to be adding any longs heavy due to the overbought conditions without a pullback next. Though if we do get that pullback and makes a higher low, this setup looks great to go higher, but you just do not want too much too soon because rallies like that can end violently like we saw earlier in the year. And of course, make sure to keep an open mind going forward. This is still highly likely to be another bear market rally, as the broader trend still shows lower highs and lower lows. But of course, that does not mean that it cannot go higher in the short term, such as that scenario that we talked about earlier. Alright, so now let's talk about a few individual trade opportunities as long as this rally does stay intact. Like we were talking about earlier, last week the largest moves were made in stocks that were heavily beat down and heavily shorted, though if this rally continues, I would not expect stocks like that to continue that trend. The weak shorts already got squeezed out, and there's a ton of overhead supply on those stocks. Instead, to keep it simple, I would expect the leaders to continue to lead. This includes stocks like AEHR that we talked about a couple weeks ago. As it continues its strong breakout, a pullback would be healthy to see next, but this is set up to move higher if this rally does continue. Another is Enphase Energy, ticker symbol ENPH. It's currently building out an inverted head and shoulders right below $320 key resistance. If it breaks out and holds above 320, this stock is headed to new highs. And a couple more ideas are Global Foundries, GFS, which is right on the verge of breaking out above that 66 level, and ON Semiconductor, which is on the verge of a massive breakout as well, and showing continued strength against the sector. So that is my take on last week's move and how I personally expect this rally to play out. We went over that potentially longer term scenario and shorter term scenarios. So if you did enjoy it, if it provided some value to you, make sure to hit that like button and subscribe button. That's been a lot, and I would greatly appreciate that. For anybody interested in joining the private Discord chat, that is the first link down in the description for all of my personal trade alerts. And I will catch you all next time. Thanks for watching. Good luck trading this week. Peace out.